Hey everyone, it's Adam here at DirectionTrader.com. I got a question in the trading room today. A newer guy came in and he asked me, how do I prevent myself from over trading or trading too much? And really, it's kind of a tough question, simply because everybody's a little different and everybody's strategy is a little bit different. But I pretty much summed it up. The best way I can see to prevent it is by using multiple time frames. Start using multiple time frames, and here's a really easy way for me to explain it. Basically, this is standard S&P E-mini. Over on the left, I have a 1600 tick, and on the right, I have a 233 tick. Actually, I'm going to make this a 512. 233 just gets a little bit choppy with the S&P, so I'm just going to make it a 512 tick. But you can make it any time frame you want. If you're going to have two time frames, I'm going to suggest your larger time frame being anywhere from 2 to 3 times the size of your smaller. So if you're trading a 5-minute on your faster time frame, make your longer time frame like a 15-minute chart. Or if you're trading tick, like this one here is a 512 and this one here is a 1600, so it's just 3 times. Something like that. And then basically, a simple way to do it is just add some moving averages. What I have here, this looks kind of funky, like a cloud or something. This is basically a 21 exponential moving average and a 55 simple moving average. Why them crazy numbers, not 20/50? It's just I use Fibonacci's a lot, so they're Fibonacci numbers, so that's why I have them like that. But you could simply do this on your own charts. You don't have to have Thinkorswim. You don't have to have code to make this this beautiful looking cloud here or it turns green when it's bullish and red when it's bearish. But basically a couple moving averages. What I'm going to do here is whenever the longer time frame is red or the 21 is below the 55, I will only take short positions on the smaller time frame. So let me even up here my charts. Alright, so right here is where we're trading at. This, you can tell, is getting a little bit choppy because the longer time frame, the moving averages are getting closer together. Obviously, it broke down. So right here, let's look in this area right in here. This is whenever the longer time frame started to break down. And make sure you trade in the direction of the longer time frame. So you have a high here, a low here, and obviously I trade Fibonacci levels. Here would be my entry, short, so on and so forth. Moving forward, let me just show you here. Alright, so this is showing only bearish moves. So I only want to take shorts no matter what. So would I be taking this long right here, this pullback here? Absolutely not, because my shorter time frame just turned green, or my 21 went above my 55. So what am I waiting for here? I'm simply waiting for my 21 to cross below my 55, and on my charts this is going to turn red. So something like this. As soon as it turns red, I go from high to low, and I draw my fibs, and sure enough, I take a fib short here. What this is doing is just stopping me from overtrading and taking all these chops back and forth, and it's getting me in the direction of the longer time frame, which is, it seems so easy when you look at it in hindsight, but when you're actually trading in the heat of battle, you have a hard time stopping yourself, because you're like, oh, look at this pullback, it's a perfect Fibonacci levels. These Fibonacci levels and these pullbacks happen all throughout the day, and especially if you have a faster time frame, they're going to be happening even more often. But let me just move forward here. Actually, I'm going to move back because this is today's price movement. But let me move back. Oh, sorry about that, guys. Alright, so over here we have prices move down, up, and we're only bearish right now, right? We're only bearish. Let me look over here. Right here, as soon as it crossed red, so what are we doing? We're looking for, this is all green, so we're going to take the first cross. We got a high here, take it down to a low, and right there's a position, right there. Now, that's in the direction of the longer time frame, and then we wait. Here we had another cross up and cross down. Let's see if the smaller time frame got us an entry or not. We had a cross up, cross down, and obviously there's no pullback, so I had no strategy here. Alright, I'm back. Sorry, I had to check the door there, guys. Anyways, So we're only trading shorts here. Now looky here, we got a cross to the long side. Let's go over here and let's check it out. So now we're only trading long signals. We don't have any. Obviously it moved a little bit fast, but we are getting later in the afternoon. It's easier if we look towards the morning session, something like this here. So we'd only be trading long right here at the open of this day. Let's move forward here and find the open. Sure enough, we got an open right here. Market pinched together a little bit right here at the open. So we're only going long. So we'd be taking longs only at the open. I know this is micro. This is just, you know, showing you which side of the market to get on though. We're only trading long. So there's a micro there, and so on and so forth. But we're only trading in the direction. So like right here, whenever this crossed on the smaller time frame, you're like, oh, this is a great shorting opportunity. No. Why is it not a great shorting opportunity? Because look at the longer time frame. It is it's obviously very bullish. So we don't want to be trading against all that. And we've started to get chop here. We're not breaking highs anymore. So then we just wait right here. You see it obviously broke out of highs. So what do? Low to high. And we have another good entry in the direction of the longer trend and the majority of the market. So I don't know if you like this or don't like this. If you have an opinion about it, it doesn't really matter to me. That is how I am going to suggest help you stop over trading. It doesn't take a lot. You can use anything you want, any indicator you want, but that's a simple way of using a couple moving averages just to help you stop getting chopped in and out, stop making 10, 15, or whatever a lot of trades is for you. Stop over trading. Me personally, I trade 4 or 5 different markets every morning, and like on the S&P, I'm looking for anywhere from 1 to maybe 4 trades a day, and that's the first two hours of the trading session. So if you got any questions, come by directiontrader.com, take a trial in the live trading room. If not, don't hesitate, leave a comment below, and I will get back to you and try to answer any of your questions. But have a good day.